We are back at it again here with another video with Invest for tomorrow. And to all the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. In today's video, we are going to talk about cryptos and why they're crashing and the mathematic equations and algorithms behind the scenes that if you don't calculate or take these things into consideration, you will overlook what is going on. Now, after the big crash or flash crash that a lot of people have stated it to be, it has bounced back significantly, but we're going to talk about why this could turn into a bull trap if real movement or volume does not bring in inflow to bring it up higher. So we're going to look at a short video talking about how cryptos overall were once going to obtain some type of value and how their value is to be attained, because there's some key things right now making the crypto markets crash. And it has a lot to do with the Fed's decisions and statements. And I'm going to break it all down mathematically in this video to make you guys understand what is going on and why this could actually accelerate a lot further if it continues to be the case and one catalyst turning this into further weakness. But before we do, let's go ahead and listen to the co-founder of Ethereum's statements. It's a 1-minute video, and then we're going to break down what he says and what he meant, and take a look at the search bar, what I stated, and he doesn't state those words at all. How I searched this video up, he just talks about it indirectly, and I'm going to share with you guys what it is that I mean by that.
Of their investment portfolio, even though it's not, they don't kind of have any real world use case. And the reason is that basically it's this kind of self-reinforcing equilibrium argument that if people see that this asset class, number one, goes up roughly with world GDP in the long term. And
he stated a key word there, and it was the fact that it goes up with the world GDP over the long term. That's a key word. Keep that in mind because we're going to break it down right after these next words that he states.
Number two, goes sort of has short-term ups and downs on a schedule that's kind of disconnected from the schedule on which stocks go up and down, then it'll just become a natural financial strategy to kind of diversify some portion of your funds into that in order to basically reduce risk and kind of protect yourself from market shocks to some degree. And so if people follow that strategy, then over time people will keep putting more and more of their money into it as world GDP increases, and so the prophecy will become kind of self-fulfilling in the long term. So
those key words, GDP over the long term, and then he states a disconnect from obviously the way stocks move, almost like a hedge against basically stocks falling and being like another place to put, or a hedge against when things are falling, this will rise and so forth. Okay, he's basically giving you and mapping out. Okay, there's no better person than to listen to the co-founder of Ethereum. I'm not saying he's perfect, no one is, but there's no better person than to actually listen and hear what this man has to say, because he co-founded the Ethereum blockchain network and he's very close to everything that's going on in crypto. If anybody knows about it more than us or any of us listening here or me speaking, it would be him. So his words in those few moments and seconds, he is mapping out literally the future of what is expected for crypto overall, and a self-fulfilling prophecy, like he said. Now, could he be right in the long term? We'll see. It's already mapping out. But why is it all falling right now? It has to do with the keyword of the growth over time of GDP. And we're going to talk about what inflation does to GDP. But then we're going to talk about what is being done to inflation by the Fed, and it's probably being priced in. We're also going to look at these charts with 42 Vision, Ultimate 42 Vision, and 42 Vision 2.0. As you can see here, it's under a bear indicator, extreme weakness all the way down on 42 Vision, and red bars on 42 Vision 2.0, showing that things are in a downward pressure trajectory based off the 4-hour. And these are tools and resources you can gain access to by joining the 42 Vision tier level. The link is down below to the 42 Vision indicator. You also gain access to the weekly watch list, daily watch list of stocks. So if you trade stocks apart from crypto, you may want to check that out. And you get the clarity you deserve as an investor to be able to navigate through the volatility and maximize on opportunities. But let's go ahead and look here at what happens to GDP with inflation. So here we are with this article, and instead of reading all through it or breaking it all down, the keywords are literally in the beginning of this whole entire article. And it says here, how does inflation affect GDP? Or you can say, how does GDP get affected by inflation? Or how do they correlate, right? That's the way you can think of it. And these are the words. Inflation generally increases when gross domestic product GDP growth rate is above 2.5% due to several factors such as demand for goods, overstretching supply, and higher wages in an ultra-competitive job market, according to Investopedia. Now, inflation has been running hot for some time, since all the way back, if we go ahead and break this down, all the way to this point where we had the situations that happened last year, okay? All the way back to 2020. If you see, this has been in a bull run because inflation was being priced in, and literally it dropped to $3,000, $4,000. Now, even though inflation was projected to go higher, Bitcoin had its drop as well. It fell with the stock market. So there's times where, even though he stated they're meant to disconnect, the stock market and also cryptos can actually fall together because of varying different factors of fear mixed in the bunch. But the long-term story is going to always get affected by world GDP, which then correlates to inflation. So as inflation increases, that means that GDP growth is accelerating. Now the issue is inflation is set to probably decelerate, and a lot of people are saying worst case scenario, we're going into a deflationary period, which is very interesting. If that does happen, we've never been in a negative interest rate scenario or deflationary situation. And then also we have the in-between, which is stagflation, which is going to basically make almost all asset classes look a little bit like, where do I go? What works best? And also it's going to create a lot of speculation in certain areas that are already hyped up. So the cryptos fell. We're under a bear indicator on the 4-hour. If I put the 1 day, you could see we have been under a bear indicator since November 16th, way up here in the 60s, and it's been falling downwards. It was fighting to come back up in this consolidation here, but 42 Vision 2.0, clear weakness and full shift into weakness. Now, we could see this possibly try to come back up and do a staircase effect. We just don't have a guarantee that this is going to go all the way back up to all-time highs, or even break through the point where the bear indicators started to pop up in the 60s, or even up here in the 50s. And right now, it had a jump up, and it's pulling right back down, and we need to see if this holds up. So what's the real reason of all of this getting priced in? There's 3 reasons behind the crypto crashing right now. And the main one is the Fed, guys. The Fed tapering quicker, which is what they've been talking about, is going to decelerate inflation. And if inflation is not getting hot, that can create a tapering that could burst the Bitcoin and crypto bubble. That's what they're calling it. And they're saying that this could actually create a correction and make Bitcoin go all the way back down below 10,000. Now, I think that is very bearish. That is too low in my opinion. Is it possible? I don't know, right? Is it impossible? I won't say no either. But I could see Bitcoin fall further and closer to 20 or probably below it. And then we'll have to see how it reacts between 20 and 10 to see what's going on. Because the Fed overall is going to be the one pricing in these pullbacks and this weakness that we see due to the fact that if tapering starts sooner than we expected, interest rates go up, okay, just look at the arrows, and inflation is going to go down, okay? Inflation goes up, Bitcoin soars. Inflation scares go down, or inflation is projected to go down, Bitcoin's going to go down with it. So that also affects GDP over the long term. Then we have here the COVID, and this right here is kind of contradicting because the Omicron is actually creating uncertainty in the markets, no matter if it's crypto or the stocks. But this is actually an inflationary situation, okay? Making inflation rise up and having to make the tapering slow down. So if tapering slows down and doesn't speed up, eventually this could be a dip opportunity that's going to rip if the Omicron was a big issue. And that's where they start contradicting themselves. But the real pricey in here that I'm seeing, it's the Fed, guys. It has nothing to do with the Omicron. The first steps was the fear, but this started way back up here in November 10th, way before the Omicron, and everyone was expecting this tapering to start. And as we get closer to it or speed it up, we will continue to see this probably in a downward trend. And every time there's a Trump, it could turn into a bull trap because inflation is getting tamed. Bitcoin is a hedge against inflation or against stock markets falling. If they both fall together, it's because this is bigger than just inflation and GDP. It is the Fed. Now, we have also the crypto winter that usually starts around the end of the year and goes all the way towards the middle of next year. That is something that a lot of people don't realize. These crypto winters, the correction starts now, but it keeps going for some time, okay? That's what we saw even back in 2019 going into 2020. If you look at it, things started to fall, okay, way back here in 2019. It was going downwards. It bounced back up, and then it went all the way down because of everything that was going on. But let's just go ahead and X this out. This was going down for months until it hit around December and going into January, okay? So what we'll look for is, are we going to bounce back in January? Do we keep going lower this next year going into January? Because if not, then this is not going to map out the same. And it's because inflation is not running hot. If anything, the tapering is putting the pressure to bring this down quicker than investors thought or saw it happening. And then also we have the small excuse that some profit taking is going on right now. But this is bigger than just profit taking. If this doesn't turn out to be a big deal, and if this turns out to be the real reason, because the Fed is the one putting the big pressure, creating the huge bubble to burst, because this was significantly elevated and it was struggling to hit the all-time highs that everyone's been talking about. A lot of people keep talking about 75,000, 100,000. If we don't see that in the next 6 months, this is going to struggle to stay up, and that might happen in the next time of a bull run or sometime in the future, because I'm not saying it's not possible. And I'm analyzing here Bitcoin, but I want you guys to see that this is not the only crypto falling, okay? Everyone's been falling the same way, same direction, 4 hour right there. Then we also have here, Dogecoin falling. We also have here Shiba Inu falling, and we also have here Ethereum falling, okay? This is really important to realize why cryptos are crashing and what is going on. And mathematically, it all has to do with GDP and also inflation and what the Fed is doing to create inflation to lower, and the tapering accelerating creates these fears beyond just the variant, beyond just profit taking. This is a lot bigger and something to be aware of. Guys, if you want to receive clarity in the charts, to be able to see the dips and the rips and gain access to 42 Vision, daily posts of stocks that I'm watching, weekly posts, and become part of a community of investors all looking to learn and grow together, check out the link down below in the description to the 42 Vision indicator. Join the 42 Vision tier level, and you will gain access to all of that to receive the clarity you deserve to maximize on opportunities through the volatility in the markets. As always, thank you guys so much for watching, and let's make some money.